the 7 to 7.5% area was resistance for this super bond rally that we had from 1981 to 1986. Now, you may have heard commentary to the effect that that bull market was the best bull market in the history of the United States bonds. You know what? It's true. And that's pretty sad. This is the classic and typical direction of bond prices over the years. Someone somewhat feistier than I once referred to bonds as certificates of guaranteed confiscation. Now, whether that's true or not is beside the point, but they don't make great long-term investments. They make great trades upon occasion. I would say that as long as this resistance area is not penetrated significantly on the upside, this picture should be viewed as long-term bearish. The five-wave structure has defined the major trend, the one larger trend, as down. The ABC structure of the rally has defined that as the counter-trend direction. So it tells you that on the very long term, the trend of bonds is down, the trend of interest rates is up. If you have trouble visually adjusting to the idea that we can have 5 down and 3 up, just do this. You see, it's the same structure. You get 5 in the direction of the one larger trend and 3 against, and of course this is not bond prices anymore, this is long-term interest rates. We've had a bull market in interest rates peaking in 81. We had a bear market that probably ended in 1986. It could make another low in this resistance area. We didn't penetrate it. But nevertheless, we have done all we had to do to correct that great 5-wave upward move lasting almost 40 years in interest rates. I'm often asked how these structures can continue to develop over the very long term. People say, look, Bob, you're telling me that the 1980s bull market in stocks is somehow related to this bull market of the 1930s, when all of the people who were participating in the market back then, or most of them certainly, have long since passed away. Certainly, even if they're around now, they're not trading like they were back then. How can you tell me that something that these speculators did back 50 years ago has anything whatsoever to do with what's going on in the 1980s? Well, let's forget the empirical side of it first. Eliot's observation that they do, and therefore you've got to deal with that rather than just trying to deny the fact that it happens, and try to figure out why events that occurred years or decades or perhaps even centuries ago have anything to do with what's going on today. Well, I used to try to give an explanation that referred to the way cultural values are transmitted over a period of time, but I never could formulate an answer as eloquently as a sports writer could. So I'm going to read a few paragraphs from one of the great sports writers and see if we can get some insight into the answer to this question from his observations on the aftermath of a football game. This happened to be an article that came out in November of 1984 describing what happened after the Florida Gators won the Southeastern Conference Football Championship for the first time in the history of that university. Now, for the moment, we won't discuss all the ramifications of what developed afterwards. Just suffice it to understand that for 50 years, this football team, or let's say this university, had participated in the Southeast Conference, the SEC, and had never once won the title. And this year they did. And here's how it was described. And when the scoreboard clock struck 0, 5 decades of frustration burst into 5 minutes of glorious joy. Gerald Wilkins, a reserve linebacker, sprinted to midfield, flung himself to the turf, and writhed in ecstasy. Elaine Hall, the coach's wife, leaped to kiss Lomas Brown, the offensive tackle, on the cheek. On the chilled sideline, Alonzo Johnson bent at the waist and clutched his belly with his hands, trying to hold the moment inside. When he straightened up, it was clear he'd failed. The rough, tough Florida linebacker was crying, weeping not only for the SEC championship the Gators had won, but for the 50 others they hadn't. Fittingly, it didn't come easy. To have waited 50 years and then won easily wouldn't have purged Gator souls the way Saturday's victory did. Now, what the hell is going on here? These people are kids. They're 19, 20 years old. They've only been playing football at the university an average of 2 years. The people in the stands haven't gone to every game for 50 years and cried over the losses. What's happening here? This was a cultural transmission of the values of the football team to all of the fans, all of the commentators, all of the players in a very short period of time. Anyone involved with that university, probably in a matter of months, was fully indoctrinated with the history of the University of Florida's football team. They incorporated and assimilated all of that information to a gut emotional feeling that spilled out as if they had personally lost every one of those championships until that year. Now, I think in the same way, transmissions of all kinds of cultural values take place over the years, over the decades, and even over the centuries. How could we have had the 1930s if we hadn't had the exuberance of the 1920s? How could we have had the rebuilding of the 1950s if we hadn't gone through World War II? And certainly, how could we have had the ebullient, crazy 1960s if for a decade or more people hadn't built very conservatively and very powerfully, year after year, a reserve big enough to begin throwing a nice party? How could we have had the 1970s, the reactionary 70s, if we hadn't overdone it in the 60s? And how could we have experienced the bootstrap psychology of the 1980s? Let's get ourselves back in shape, everywhere from government to personal jogging, if we hadn't gone through the 70s, which most people considered a negative psychological period. I say we couldn't have, that each change is born from the preceding conditions and is ready to generate the next change. The market acts the same way. Now, just as valid, I think, is the question, okay, maybe I'm convinced that this kind of thing could happen over the long term, but you're also telling me that on the short term, you're seeing the same structures. That if I'm looking at a 3-year bull market that takes a 5-wave shape, the intermediate term advance of wave 1 is taking a 5-wave shape, and wave 1 of that took a 5-wave shape, and wave 1 of that, and so forth, all the way down to things I can barely measure. Well, my answer to that is, so far there has been absolutely no evidence to indicate otherwise. Does mass psychology really operate at the level to create 5 up and 3 down, or 5 down and 3 up in a correction on, say, a matter of a few hours? The answer is yes. We've been watching quote machines now for several years which give you tick-by-tick data. You can make 5-minute bars, 15-minute bars, and 30-minute bars, and sure enough, the L8 wave pattern continues to show up. Here's an example of one. This is a chart from September 1987, actually August 1987, of the major market index of stocks, referred to as the MAXI. It so happens that there's a story to this. This was utilized in real time to make some money. When this came up on the chart, someone said, have you noticed this very pretty 5-wave upward structure that we've just created over the last couple of hours? What should we do? Well, we want to buy something because this 5-wave structure is indicating the larger trend is up. We've been in a larger correction prior to that. Where would you place an order to buy a futures contract on the MAXI? Somewhere in the area of the previous 4th wave, right? And of course, this is the lower boundary, which means, according to the guideline, it would be very rare for prices to go under that level if indeed a new impulsive wave structure was unfolding. So they put their order in to buy at the lower end of the 4th wave because they wanted to keep risk low. If they didn't get it, that's fine. If they got it, they had their stop in right there. just below the low point of wave 4. And here is the way prices ended the day. The order was filled right here at the low on a spike, which undoubtedly was a lot of stops being taken out at the last minute. No stop was taken out because it didn't go below the 4th wave, and stocks immediately turned around and went to a new high for the day. So you don't have to look at a 50-year chart and wait a decade or so for your forecast to work out. You can apply exactly the same rules and exactly the same guidelines to any degree of development of prices. One of the best ways to learn the wave principle is to watch the development of these structures on the very short term, because you'll learn a lot of lessons in a short period of time. You'll see a lot of 5-wave structures develop, a lot of corrective waves develop, a lot of pullbacks to the previous 4th wave, a lot of times when 5 is about the same length as 1, or if not, it'll be a Fibonacci relationship, and on and on. You'll see alternation occurring very often. When we come back, we're going to apply the rules and guidelines we've just explored, and we're going to take a big step forward. We're not going to just talk about counting to 5, we're actually going to do it. Thank you.